Does value investing work in Asia? Are there even successful value investors in Southeast Asia? Well, yes, they are. Hi guys, Stanley here. Although most of the great value investors we hear about are mostly based in the US, say Warren Buffett being one of the most famous of them all, Warren Buffett actually returns about 20% a year since 1965. That means that if you have invested about $10,000 in his company Berkshire Hathaway back in 1965, it will be worth more than $200 million today. Over the past few decades, Buffett has really concentrated in buying great companies that can grow for a long time. And we learn about other great investors in the US like Charlie Munger, David Einhorn, and Howard Marks. But we rarely hear about great investors in Asia, especially in Southeast Asia. Do they even exist? Well, just because they are less talked about does not mean they are less impressive in any way. Here are 4 value investors in Southeast Asia with track record that might blow your mind. Number 1, if we have to talk about value investors in Asia, we have to talk about Dato Sri Chia Cheng Hai. He's the co-founder of Value Partners Group Limited, the largest local fund management firm in Hong Kong. Dato Sri Chia has a classic rag to riches story. He was born in Penang, Malaysia back in 1954. When he was very young, he started out working as just a newspaper folder in Malaysia, and later on he went on to have a journalist career. He changed his career in 1989 when he joined UK-based brokerage firm Morgan Grenfell and Company as the head of research. And by 1993, he set up Value Partners Group with Mr. Ye Vini. Today, Value Partners manage about $12 billion US, and mostly they invested in China. More impressively, his flagship fund has returned about 14.6% return a year over the past 24 years for its investors. Dato Sri Chia has really made a name for himself as a China expert and breaking new grounds by investing into mid and small cap Hong Kong shares and A share and B share in China. So he has definitely been an inspiration for many people in the fund management industry. Next, let's look into one of our local Singapore investors. Outside of the financial industry, not many people might have heard of Target Asset Management. However, this boutique investment firm in Singapore has produced one of the best track record in the past 2 decades. And his founder, Mr. Teng Nhiet Lian, has started the business back in 1996. And since then, it focuses on equity investment in the Asian markets. Mr. Teng was previously a managing director for Morgan Grenfell Investment and UBS Asset Management before setting up Target Asset Management. From his company presentation, it shows that the firm has a very clear investment philosophy and strategy when it comes to investing in Asia. He believed that every company has intrinsic value to its business, and therefore, the firm will invest in company trading cheaply against their intrinsic value. According to their fund's presentation, Mr. Teng liked to focus on a few things. Number 1, they like to focus on companies in early growth industry or fallen angels or out of favor industry. From this sector, Mr. Teng will then look into companies with the 5 rights. That is, it must be in the right business, meaning that the business must have a growing future. And number 2, he likes to find the right management, ensuring that the management he is betting on is good and trustworthy. So the company would also then need to have the right financials and valuation. Next, it also needs to have the right risk and reward ratio. This means that the upside potential must strongly outweigh its downside risk when investing in that company. And lastly, Mr. Teng looked for companies with the right stock liquidity. This is due to his fund size, and it is quite impossible to invest in a small cap stock with no liquidity. And from inception to his first retirement back in 2010, he has generated about 17% a year return over the 14 years period he is investing. So Mr. Teng is surely one of the greatest investors in Southeast Asia, in my opinion. Next, there is Dr. Tan Chong Koi, the founder of FIM Asset Management. He is one of the pioneers in building up the fund management industry in Malaysia. And since founding the company back in 1994, he has created multiple record-breaking funds and won a great number of investment awards in the industry. Dr. Tan adopted a strong investment philosophy of seeking out stocks that are trading below its intrinsic value. He looked at companies with good management, high margin, and also strong growth. With his strategy, FIM Asset Management has pushed many of their funds to become some of the best performing funds within their industry, and very consistently. In recent years, his firm has even won the Best ASEAN Emerging Company Funds for the 15 and 20-year period by Morningstar. The fund has returned more than 352% over a 20-year period compared to just the 1.6% of the benchmark. At his peak, Dr. Tan managed close to $2 billion in asset under management. Although he faced some setback in his career over the past few years from an action by the Monetary Authority of Singapore, his long-term track record is undeniable. This put him at one of the top among the greatest Southeast Asian investors of our time. And lastly, I would like to talk about Mr. Wong Kok Hui, who is the founder of APS Asset Management. He founded the investment firm back in 1995 as a very small boutique fund. Today, it is estimated that APS Asset Management managed about $2 to $3 billion under asset management. Over the years, Mr. Wong has really created great value for his client. His flagship funds has returned about 20% a year from 2008 to 2015. Mr. Wong has shown a unique approach of researching for investment. He called it the 4 alphas approach. Basically, in every investment, he would need to identify the type of alpha, which is outsized return, that he can generate from that investment. And the 4 types of alpha for him are: number 1, structural alpha. These are stocks that are operating in a growing industry and that we can tag on to the rising tide in the industry. Secondly, there is what he called dynamic alpha, where stocks that are turning around in a cyclical industry. Many of the stocks today that is facing a slowdown due to the current pandemic might have dynamic alpha with them. Next is economic alpha. These are stocks that are trading way below its intrinsic value and are often preferred by deep value investors. And lastly, he looked for opportunistic alpha. This might be an event-driven special situation that is happening and the market is not pricing in on the return of the stock. We have actually done an exclusive interview with Mr. Wong and Dr. Tan in our book Value Investing in Asia. If you want to know more about these two amazing investors, you might want to check out our book as well. Link on how you can get the book is provided in our show notes below. But the reason I want to share the story of these 4 investors is to show you that all these 4 investors use very different investing styles from one another, and yet they are very successful in their own right investing here in Asia. This shows us that value investing can work in Asia as well, and has been working over the past few decades. So instead of hunting for a special insider knowledge before we trade a stock, we should really focus more on the fundamentals of investing, and the result will definitely show in our portfolio. So if you want to learn more about investing, remember to check out our free investment course at valueinvestasia.com/free course. We hope to help you get the basic of investing right before you even start your investing journey. Anyway, that's it from me. Till we meet again, invest safely.